Investors laser focus on tomorrow's CPI report for October. Economists expect prices rose 0.6% from the previous month, an increase from September's rate as oil and gas prices ticked higher. Markets heading into the report on a down note, with major indices posting their first loss in 4 sessions. The Nasdaq shedding nearly 2.5%. And take a look at Disney, dropping more than 13%. That's its biggest decline since 2001. It lost $34 billion in market cap in just one day after yesterday's earnings report. Our next guest expects the U.S. economy to avoid serious recession despite historically high inflation. Katrina Dudley is a portfolio manager and investment strategist at Franklin Mutual Advisors. She's got an $8 billion under management. Katrina, great to have you with us.
Thank you for having me.
So what stuck out at me in your notes, and I know we're going to talk about, the macro and all that, is that you like housing. And this is a totally out of consensus kind of trade. And I'm wondering if this sort of is just an outlier trade, just a sort of like a, independent trade, or if this is tied to what your macro view is.
Look, I think if you take a look at the macro environment, it's so easy to be negative on the housing stocks in particular. And we are talking about the housing stocks. In this sense, we've got a market that's completely undersupplied. We haven't been building as many homes as we need. Yes, we know what's happening with mortgage rates. Mortgages are making homes less affordable, but the cure to affordability is really simple. People will buy smaller homes with smaller footprints. We've seen that happen time and time again.
Huh. So if mortgage rates, do you think that mortgage rates will go higher? I mean, I'm wondering what's embedded in this bull thesis of yours. Can mortgage rates go higher, or do you think that we're sort of capped here in terms of the 10-year yield?
I think that they will go slightly higher. If we have a look at what we're expecting from the Fed going into the end of the year and early next year, we still think that there are some rate rises coming. I think the pace of those will slow. But if we do continue to have those rate rises, we will see mortgage rates go higher, but they won't go higher at the same clip or the same pace that we've seen them go high over the last year and a half. So I think that we're lessening the pace and lessening the burden of those higher mortgage rates.
Hey, Katrina, it's Tim. Thanks for joining us. Something else that jumped out from your notes was your commentary on European investing, especially because of the currency tailwind. And I often, as someone that's been in emerging markets, I say FX sometimes is half your return profile. Can you talk about that and also the underlying markets, though? Because we kind of get some of the current account surplus dynamics for the euro, but the underlying stocks still have a lot of headwinds.
Look, if I take a look what's happened in Europe, most people are very surprised that in local market terms or local currency terms, the market's actually done better than the United States. And Europe is really facing a number of headwinds, and they're very clear. It's the Ukraine-Russian war. It is the energy crisis. And also, they're facing the same monetary headwinds that we're facing here. But we think that the market will be able to take advantage of that. We think that they're already priced in. So we actually think it's a really good setup here for European equities going into year end and setting up into next year.
All right, Katrina, we're going to leave it there for today. Thanks so much for joining us. Katrina Dudley of Franklin Mutual Advisors. Julie, where do you stand on any of the trades that Katrina has, and what are you thinking? How are you thinking about CPI tomorrow?
Yeah, I think protecting yourself for CPI and being in a position where you own durable businesses with pricing is pretty important. I think actually her point on housing is really interesting. If you look at where a lot of the home builders are, many of them have really learned their lesson from the last housing downturn. They have a different approach to how they're putting their land banks together, and I think they are smart enough to be able to put together houses that are more affordable. I think they're all looking at their punch lists and sheets and saying, okay, we're not going to do surround sound in the houses anymore. And at the end of the day, there's still such an intense need for more housing. We have such an intense shortage that I think they probably won't be as bad as they have been in the past. That doesn't necessarily mean that they're investable for the long term, but I do agree. I think that it could be overdone here.
Grasso?
Yeah, so D.R. Horton is known to be a spec builder, and it has the best chart in the entire home building complex. I wouldn't run out to buy the home builders because of all the obvious headwinds, but D.R. Horton, if we're concerned about supply, they're the ones that have the supply on the market.